In this lesson, I will explain to you about accounts receivable, that when we have to use accounts receivable account in accounting. So here I have made few transactions. So see, in our business, we purchase something and then we sell something. So purchased, we have discussed in the last lesson. Here our topic is sale. When we sell something, then our revenue account generates the income which we will use in our income statement. So see here, first we will discuss these three transactions, then it will be more clear. Then when we have to use the account receivable. In purchase, when we purchase something, we have to use accounts payable, which we have discussed in our last lesson. For sale, we have to use accounts receivable, which is the assets account, and assets increases on debit side. I will make a account here. This is the T account, this is debit and credit, which we will use for these three transactions. Okay, so first is, suppose I will say this is 2018 May and the date is 15. Received 1000 from customers taking driving lessons. This is our transactions. And always there is no need to use the word sale. Whatever the word you will see in the transaction, same word you have to use for the revenue account. But keep in mind, for the sales, the revenue account will generate. So when we perform services, suppose you are a doctor, you are an engineer or lawyer or consultant, when you perform some services to customers, then you have to think whether you have received cash or the customer says that he or she will pay you in the near future. If you will receive the cash in the first transaction, suppose we have provided driving lessons to the students and then we have received 1000. We have received, it means cash. We have received cash, and cash is the assets account, and assets increases on debit side. That is why we have to write down cash here. How much we have received? 1000. Now we have to think about our credit entry. We have performed some services, right? Driving lessons is the services. We have performed the services. When we perform the services, our revenue account will generate, and revenue increases on the credit side. So here we will write down revenue driving lessons. Complete, you have to write down, and the credit account you have to write down by using indentation. Okay, then here we have to write down 1000. What is indentation? That you have to write down a little bit far from this C. Do not start from here, revenue. So revenue driving lessons here. When you perform services, you have to see whether you have received cash or the customer says that he or she will pay you in the future. If they will say for the second transaction, see the same thing here. You have performed services. You suppose you are a consultant, but here we are we have the institution for the driving lessons. We perform the services, we provide the lessons to the students, but the student says that they will give us 13,000, maybe 1300, maybe next month. So when we perform services on account, it means here you have to write down the date, accounts receivable, that you have to receive the amount. I will say, and from whom? You have to write down here. I will say from Robin. Suppose I have provided the driving lessons to Robin. So I will write down accounts receivable is the assets account, and assets increases on debit side. So debit side. And now what is the credit? Same thing. Revenue driving lessons. Whether you have received the amount or there is the whether you have received cash or maybe you will receive in the near future. In both cases, our credit will be revenue driving lessons of 1300. Right? So where you have to use accounts receivable? When you perform services on account. Keep in mind, for sales and for perform services, our credit is always our revenue, which we will use in the income statement. And on 18th, suppose you have received from Robin 1300. So what will happen? Now we have here 1300 on the debit side of this T account, and Robin is going to pay on 18th. When you will receive the amount, your this is our account receivable account. Account receivable will be 0, then you have to write down on the credit side, because assets decreases on credit side, then balance will be 0. There will be no more to receive from Robin. So here Robin is going to pay us. It means when we Robin will pay us, we will receive cash. Our cash will be 1300, and then this receivable will be credit. And it is necessary that you have to write down from whom you are receiving, because in our business there are hundred or thousands account receivable from different customers. So here I will write down 1300. So this is the difference between the purchase. In purchased, we use, if it is purchase on account, we use accounts payable. If it is sales on account, it is account receivable. Accounts payable, you have to write down on credit side, and account receivable is the asset you have to write down on the debit side. So make your concept clear. When you perform services on account, you did something, now you have to receive, so it means account receivable. But when you purchase something on account, then it will be accounts payable. I hope the concept is clear, so please practice it. If you have any question, you can ask me. Subscribe to my channel, and thanks for watching.